Hey guys, Mike here. So tomorrow's the big day, 8:30 a.m. Boom, boom, boom. CPI is hitting, and so it's going to be a big move either way it goes. And there's some things happening today. Does not surprise me a bit. We're going to go over that, and also something you need to put on your chart. So just be aware of to kind of keep things in perspective, right? Something that you only get one of. You only get one of in a bear market. Okay, and I'm going to show you exactly what I'm talking about, and you'll want to see this. And so look. CPI, they're expecting around headline 7.3. And when we look at it, it looks like June obviously was the peak, right? Because we went down to 8.5, 8.3, 8.2, 7.7, and now we're expecting 7.3 tomorrow, as you can see. And if this happens, or if we come in less, you're going to, or it don't matter what we come in at, you can see huge swings tomorrow, right? This says right here, U.S. stocks see 3% move up or down on days when CPI is released. And so that's not going to be any surprise at all. And another thing that's not surprising me is how much people are hedging. Put down in the comments if you're doing this. And as you can see, volume on single stock put options skyrockets relative to calls. And what's going up today? The VIX, right? The indexes that record this are green, but look at the VIX, almost up 9%. Biggest move I can remember in quite a while for the VIX here, just in one day. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And, are any of us surprised by that? Not really. No, of course not. I mean, you're expecting people to hedge. I mean, expecting the worst, that kind of stuff. Or some people just hedging their portfolios, right? To see what they can do there. But, I've seen projections as low as 7.1, right? 0.2% lower than what they're expecting. And you got to remember, I know it don't feel like it, but rents have come down. Gasoline has come down, right? Other expenses have come down. I'm curious to see what the medical expenses are going to be. Because remember, they did that, like I think it was a one-time adjustment last month, which is what made it beat. I don't know how that's going to work out this time. And so, it'll be interesting, but either it's going to rocket up or it's heading down into the tank. But the question is, remember when PPI missed, everybody thought, oh man, the market dropped real quick and then it recovered. All right, so are they going to do kind of the same thing tomorrow going into the Fed meeting, knowing that everybody wants that Christmas rally at the end of the year? And so if it wasn't December, I think we know which direction we would go. The fact that it's December, we'll have to see. Put down in the comments what you think CPI is going to come in at, 7.3 or under or over 7.3. And how do you think the market's going to react to it? And so now what I want to do is tell you this right here. This is something, you only get one of these in a bear market. And I'm looking at what's happening now, and that's why you need to know this. And I'm going to prove my point to you. And so just keep this in mind when you're thinking, is it the bottom? Is it not the bottom? When are we going to bottom? All this other stuff. When people keep slinging that around, because if we come in under tomorrow and get a 50 basis point hike and the market just starts roaring, right? That's the talk of the town. That's what's going to happen, right? And so understand this right here. I did the research on this and just, I don't know how I came up with this, but came across it and I was looking at this. You see currently, this is the daily right here, the 50 and the 200. When they cross up, it's considered the golden cross, and they cross down, considered the death cross. We already got our death cross. Keep in mind, in a bear market, an extended bear market, you get one. Understand me? 2008, what do you see? Up and down, up and down. You got one at the end of the recession. It was over. Bear market was over. Dot-com bubble. Boom. It touched it. Did not cross right there. But you see it came up many times, and then it crosses. It was over. It was over. Never went down again until 2008. Then you come up here, go in the 80s, right? This is an extended bear market right here. And boom, you get one cross. That's it. Go back into the 70s when we were fighting inflation. It almost touched, not quite. Came up a couple of times. Boom, you get one at the end of the recession. It was over. Stock market started rocketing up, right? You go back to 1970s, 60s, and 70s. Right here in the early 70s, boom, you get one cross. That is it. And so keep that in mind. What do you see happening now? Hadn't got a cross yet, right? We got on the daily, we got the death cross, but not the golden cross, right? Well, now let's go to the weekly. We'll pull up those moving averages. How many do you get? You get one. You get the death cross, which we have not had yet, and then you get the golden cross. That's it. You get the death cross and the golden cross. And this one comes way later after the recession because this is a weekly chart, as you can see. So the bottom would have been in for a long, long time. Keep that in mind. But the key is you get one, all right? You move up here. Now we're going to the dot-com bubble. Death cross actually happens on the weekly in the middle of the recession. It does not cross until like 2 years later on the weekly, okay? But again, you get one. That's all you're going to get. And then when you go up here to the '08 financial crisis, boom, the weekly actually crosses in the middle of the recession, and boom, you get one way later. What do you see happening now on the weekly, right? And pay attention to the bottom right there, the 200. It hadn't even began to fold over yet, and you're not going to have that happen for quite a while. Usually you're in the recession when it actually happens. And then the 50, you can see right there, is starting to fold over, starting heading towards the 200 right there. And another reason to really look at this, and this is stuff you discover accidentally, but look at where the death cross is happening on the weekly. In the recession, we hadn't even come close, folks, to that happening right now. And so therefore, it's something else, a nugget to use going forward. And we'll see if it holds. It's held every other time. But if we get a weekly death cross, remember, we're in a recession. That's just the way it is, because that's what happened every other time. Again, this could be a unique time. It definitely is. But the odds are in your favor to go, oh, I don't need that group to tell me we're in a official recession. Dude, we just had a death cross in the weekly. We're actually in a recession. We're either going to be right in the middle of it or closer to the end, but we're going to be in the recession. And so I know you're thinking, why is Mike telling me this? Because look what's happening on the chart. The 50 is moving up. Okay, so for whatever reason, we have some crazy number coming to March, way lower than what people expected, right? That means the Fed will definitely start cooling the rate hikes. Then you already see the 50 curling up on the daily. The market's going to rock it. The 50 is going to follow right behind it. And if you do see a cross, it's over. That's it. Now, could it be the first time in history that we have, it goes up and all of a sudden something happens and it rolls back over? Sure, it could be the first time in history, and I'm not saying it's going to happen. What I'm just telling you that is everybody's speculating, is this the bottom? Is that the bottom? Blue, blah, blue. Is the bear market over? And I keep hearing the bear market over. I'm like, what are you talking about? The golden cross ain't even happened yet. When the 50 and 200 cross, it's over. I just showed you. That's it. Right? So there's no speculation to it. It's over when that happens. If that doesn't happen, it rolls up and touches it and bounces back down, then we're heading back down. All right? That's the way it is. That's why you need to know that. And understand what's throwing the wrench in is this right here, and this came out today. And this is household net worth as a percentage of disposable personal income. And look, even though it's rolled over, it is at 777%. Look where it normally was, right? In the sixes, way up there, right? And what do people have? Way more equity in their homes right now. If you bought anywhere from 2015 to 2020, especially if you refinanced, with this huge run in prices, you're sitting on all kinds of equity in your house, right? People got, and I know they say there's the debts for personal debt, is like 1 trillion. But when you actually compare it to GDP, you look at it historically, it's just not as bad as what it sounds like right now. It is bad when people lose their jobs. But understand it's not as bad as long as people, I just showed you all the raises people are getting, not just for staying with their companies, they're getting more for leaving the companies. Right? Still 1.7 jobs, every one person out there. That's just reality. That's what it is. And that's what's holding everything up right now. And again, it's like a house card. It can fall fast. Right? We all seen it. I've done members videos showing them how fast the unemployment rate can spike and how other things are going to spike right on with it if we hit a real, actual recession. All right? And there are rolling recessions you can see happening, what it feels like. The real estate industry would be one of them. Used cars would be another one. Right? But this is what's throwing everything off, is we just still have enough of us have it to keep this economy rolling, right? And what's the government doing? They're saying, oh, cool. Let's see, when's the last time somebody paid student loans? What has it been? 2 years? 2.5 years? I don't lost count. That's the third largest bill in people's households, all right? In most people's households, because most people, I believe it or not, a lot of people go to college. And so if I take away your third largest bill, it's like, whew, man. That's nice, isn't it? That's just more money. Either going to go into savings, or what most people are going to do with it, they're going to spend it. And it keeps that economy propped up. That's what happens when you have 70% service economy, right? Which is another thing that's throwing a lot of stuff off, is the manufacturing looks like crap, but then when you look at it, you go, what do we make in this country? 70% services. All right, we outsource all that, right? And so I think that's throwing a lot of the data off as well. And understand, if we do continue to go down, you got to be very clear. The market, if we do hit a official recession, you won't know it's like a year later. That's when I'll declare it. But I do once a month. I will do a video for the members to keep them up to date on all the metrics I can find, and you'll see it. You'll feel it. Is what you'll feel. Is you'll see the unemployment rate spike through the roof. But understand, the market at that point in time, if this happens, will bottom in the middle of the recession, middle to end part of the recession, and this proves it right here. And I've showed it many times. but the average S&P returns are typically higher towards the end of recessions. And you can see right there, first 3 months, see, not looking all that hot, right? Then you got the first 6 months, whew, that's looking rough. But then here we go, right? The last 3 months to the last 6 months, all of a sudden things start taking off like a rocket ship, because the S&P will be up a lot, but the stocks will be up way farther than that. And so these are the type of things to keep in mind, and it helps block out the noise. If you just look at the chart and go, well, I mean, if we know the bear market's over and that 50 crosses that 200, even though the bottom would already happen back there, right? I don't have to keep speculating, and I also understand if we do go into a recession, which a lot of people say, like, how do you avoid it? But the truth is, another thing we're doing, you're starting to see so much bearishness, right? The 90% CEOs saying we're going into a recession. The confidence Michigan survey, as far as like how we feel, it's 8 straight weeks or months or whatever it is, negative, never seen it before. All these things, and you start to go, okay, are we getting too over bearish? While at the same time, I'm looking at a fear and greed index as greedy. It's just this craziness right now happening. But when I look at this stuff, it just helps block out the noise. And I go, okay, well, that hadn't happened. So therefore, we're still in a bear market. I put this out there because I hear people saying, oh, bear market's over. We're in a bull market. I'm like, what? Like, how can that be? And I look at that, I'm like, again, could be the first time in history we're going to a bull market without it happening. Could be. But it would be the first time in history. So just keep that in mind. Find stuff like that because it'll help you keep the noise out and stuff like that. And understand, as you see, when we go into recession, because you're going to be wondering, like, how, if we do go into a real recession, how's the market going up? How's the market going up? The market is forward thinking, right? Look what happened in China. China stock started to run before they even announced they're going to start decreasing on their officially announced. They're going to start trying to cut back on COVID stuff and all this other stuff. So, that's just the way it works. And so I want you to put that out. I want you to know it, write it down, put it on your calendars, put it on your chart so you know it, okay? So anyway, tomorrow's a big day, 8:30. I'll put the morning news brief out after that especially, and we'll see where the market's heading because that's going to totally dictate it for today, and that's all you can, expect. All right. So I hope you guys have a good one. Hit the like and subscribe button if you get anything out of it. Sign up for the membership if you want to. What's the McDonald's combo. And I'll see you guys tomorrow.